Okay, let's dive right into this explainer. Today, we're looking at Fintech's version of a Game 7. Just like in the playoffs, the intense pressure of Q1 earnings season proves that regular season records mean absolutely nothing when the lights are brightest. Thursday night gave us a high-stakes showdown with three massive earnings reports. And let me tell you, there are no moral victories allowed here, just the raw scoreboard.
Here's tonight's starting lineup. We'll start with the overall Fintech scoreboard, then look at how Coinbase drops the ball, followed by Block shoots and scores, Affirm defies the odds, and finally, our post-game takeaway.
All right, let's kick things off with Section 1, the Fintech scoreboard. To really set the stage here, we're looking at three companies whose performances paint a very vivid picture of the current financial tech landscape. We're going to see exactly how Coinbase kind of failed to make it out of the first round, while Block and Affirm prove they are absolutely still in the game. Moving right along to Section 2, Coinbase drops the ball. So let's look at this number, because it's the crucial point. A staggering Q1 loss of $1.49 per share. When you compare that against the 6-cent consensus estimate that Wall Street analysts were expecting, wow, that is a massive miss. And this number really anchors what was just a brutally tough quarter for the crypto exchange. The hard numbers show us exactly why that happened too. Revenue plummeted 31% compared to this time last year, dropping down to $1.41 billion. They completely missed the $1.49 billion mark expected by the street. Why? Because retail traders just didn't show up to play. Consumer trading volume completely collapsed by 54%. And honestly, the institutional side wasn't much better, dropping 48%. Unsurprisingly, this caused the stock to drop almost 7% in after-hours trading. Here's the thing about Coinbase. They have this historical problem where they live and die by crypto prices and retail participation. When Q1 delivered absolutely neither of those things, management had to respond. So step 1 was the slump. Step 2, a structural pivot involving a 14% workforce reduction, letting go of roughly 700 employees. They're taking a $50 to $60 million restructuring charge, mostly landing in Q2, to aggressively cut staff. And step 3 is chasing AI-driven efficiency for the future. But there actually is a really fascinating silver lining here. Despite that brutal revenue lag, their underlying infrastructure is actually thriving. Coinbase hit an all-time high in crypto trading market share. Plus, their prediction markets just crossed $100 million in annualized revenue in less than 2 months. That's a huge deal. I think this quote brilliantly illustrates peak Coinbase energy. The infrastructure is clearly growing, even if the revenue isn't quite there to match it yet. They are playing a massive long game that right now is dressed up in some serious short-term pain. They're building the airport. They literally just need more flights to land. Let's pivot to Section 3, Block shoots and scores. If you want to see what an MVP performance looks like, Jack Dorsey's outfit showed us exactly what a win is. They posted Q1 adjusted earnings per share of 85 cents. That is a massive 25% beat on the 68-cent consensus expectation, and it's up 52% from a year ago, a total slam dunk. And the crazy thing is, they aren't just winning right now. They are raising their future guidance across the board. They bumped their full year 2026 EPS guidance from $3.66 up to $3.85 and bumped their upcoming Q2 guidance to 86 cents. The market absolutely loved this confidence, sending the stock jumping 7.6% after hours. So what was the secret to this payoff quarter? It was a pretty brutal AI-native strategic bet. Block cut roughly 40% of its workforce. They dropped from over 10,000 down to under 6,000 employees. But they framed this not as a panic move, but as a very deliberate AI-native restructuring. And wow, is that efficiency thesis showing receipts? Cash App is sitting at 59 million monthly actives. Even better, their primary banking users, the ones actually depositing their paychecks, are up 22% year over year to 9.3 million. Why is that absolutely crucial? Because those primary users generate nearly 10 times the gross profit of a standard peer-to-peer user. Add in a massive new Uber partnership bringing Cash App Pay to Uber and Uber Eats, and Block is quietly becoming the financial operating system for people who never want to step foot inside a physical bank. Moving on to Section 4, Affirm defies the odds. Let's bring in our final competitor to really build on this positive momentum. Max Levchin's Buy Now, Pay Later machine posted a massive fiscal Q3 EPS of 30 cents, blowing right past the 19-cent consensus by a whopping 58%. It's like Affirm absolutely refuses to let analysts be right about them. As you can see cleanly laid out here, Affirm comfortably cleared revenue estimates, hitting $1.04 billion against the $993 million expectation. And just like Block, they lifted their future sales outlook above the street for both Q4 and full year 2026. This proves that last quarter's 30% growth wasn't just a fluke, it's a very solid pattern. The stock popped almost 5% as a result. What you should really take away from this is their incredible future positioning. Backed by a massive network of 420,000 merchants, Affirm is expanding its partnership with Stripe. They are perfectly positioning themselves for something called agentic commerce, which essentially means AI agents completing purchases autonomously for us. The momentum is very, very real heading into their upcoming investor forum.
Finally, Section 5, the post-game takeaway. Let's head into the locker room.
Connecting the dots on the industry's biggest theme right now, AI efficiency, we see a stark contrast. On one side, you have Coinbase's AI hope. They're just now announcing their 14% cut to chase future efficiency. But on the other side, we have Block's AI reality. They already executed a much deeper 40% cut, and they are currently showing us the actual financial receipts of that leaner structure. So, to recap the final scoreboard across these three giants, Coinbase is taking the short-term pain, literally waiting for the retail flights to land at the airport they're building. Block proves without a doubt that a leaner, AI restructured company can still achieve massive growth and higher guidance. And Affirm, their unstoppable momentum just keeps growing faster than anyone's models, making the bears look downright silly quarter after quarter. As Affirm pushes heavily toward a future of AI agents completing purchases autonomously, it leaves us with one truly fascinating question to end on. As financial tech gets smarter and leaner, is the era of human-driven retail clicking already becoming obsolete? I mean, will humans even be the ones clicking buy in 5 years? Think about that as you review your own portfolios. Thanks for joining me for this explainer, and keep your eyes on the scoreboard.